Let's talk a little bit about AI and the tech industry and what it means for states specifically, because a recent assessment of the California state budget finds that the upcoming fiscal year is actually quite balanced. And the key to this has been a booming stock market from high-income workers, many of whom are, of course, optimistic about AI. Incoming San Francisco Mayor Daniel Lurie tells Bloomberg TV that working with AI firms like OpenAI is critical to the city's economy.
Sam Altman has been great as a transition co-chair. We are committed to leaning into being the home of AI. We have historic investments already here in San Francisco. We're going to continue to lean in.
Joining us now for more on today's Muni Moment is Gabe Petek. He is a legislative analyst for Legislative Analyst's Office in California. Great to speak with you, Gabe. I guess the first question here is this balanced budget is better than what your office had initially anticipated. What's the single biggest reason why? I mean, I know that you make forecasts, but even you were taken aback.
Well, thank you for having me. And that's right. You know, the state budget has improved over the last year or so. And what we're seeing right now is the state budget, as we look ahead for the upcoming fiscal year, does appear to be roughly balanced. And that's even though our expenditures are higher than had been assumed back in June when the policymakers adopted the budget. And the reason that it remains imbalanced is that we are seeing pretty robust revenue growth. Our revenues are about $7 billion higher than what they were back in June when the budget was enacted.
So this is good news for the state of California, but it's not necessarily going to be something that's durable, because at the same time, you still have deficits in your forecast. At what point do deficits reemerge?
That's right. That's exactly the issue. We describe this situation as actually rather precarious because all of these gains that I just described are coming from income taxes, and the bulk of those gains are coming from gains accruing to people that make high incomes, people that receive restricted stock units, capital gains, bonuses, this type of income. It's not your hourly wage worker or salary earner. It's coming from these high income taxpayers. And that's very correlated with how the stock market is doing. And so if we have a reversal of the stock market in the coming year, it could really weigh on the state's fortunes. And because this strength in the revenues right now is tied to the stock market, we can't predict that with good credibility into the future. So we're assuming a return to more historically normal rates of revenue growth. And when you do that and you compare it with the expenditure growth that we see in our forecast, what you see is the emergence of deficits in the very first year, 2026, 27, after the upcoming budget year.
But Gabe, how does this tie in, though, when we talk about the appreciation in asset prices? I mean, that goes hand in hand with an appreciation, in theory, you would, of what these companies are generating in terms of cash, revenue, and obviously profits to some extent or another. So kind of square that circle. I understand that if you get a market reversal at the end of the day, that doesn't necessarily mean that the company behind that one particular stock is somehow not generating the revenue, and i.e. the potential tax revenue that would come out of that.
Yeah, well, what we're seeing is that the economy of California, the regular economy that you think of, is actually rather lackluster. It's actually been gradually declining over the last 2 years. The state of California has not added any new jobs outside of government and healthcare in the past year and a half. And so the valuations of these firms is really propping up our revenue trends and our revenue collections. And the way that it does that is through the compensation to these high-income workers. And even in the tech sector, they're not really adding a lot to the job base. They're really just increasing the valuation highly and then compensating their employees, and that's where the benefit is coming for the state budget.
Yeah, and of course in the markets we call that multiple expansion. It's something we've talked a lot about. I am curious though, particularly when it comes to tech, and let's just talk about AI, because a lot of people are drawing parallels between the AI boom and maybe what we saw during the internet boom in California in the 2000s and the early 2000s, and of course the actual computer revolution in the 70s and 80s. Is it possible, given that a lot of these AI companies are domiciled in California, is it possible that at some point we do see meaningful and material and tangible growth in those companies in terms of hiring, wages, and everything that goes along with it?
Absolutely. I mean, our forecast is, I hope if anybody looks at it, what you'd see is a fair amount of humility here. What we're saying is the revenues this year look pretty good. It's difficult for us to project that growth rate continues into the subsequent years. It could be, that we're experiencing the peak of the market right now, and there's a downside. But there's also an upside, and it goes to exactly what you're saying, Romaine. There could be that this optimism around AI that's fueling the markets is warranted. You also can't forget, the Fed is in the course of easing monetary policy. And what we've seen over the last couple of years in California is that the state's economy seems to be quite sensitive to interest rate policy. And so if that trend continues, that could also help us.
All right, Gabe, great stuff here. Really just fascinating to me, being an outsider looking in to, of course, the biggest economy that we have in this country. Gabe Petek over at the Legislative Analyst Office in that state here. A closer look at the impact, or maybe the lack of impact, that all that multiple expansion in the tech space is having on its budget.